Hey, everybody. We're going to be dipping into decoding some trucking insurance. We're going to be talking about some insurance policy versus an insurance program. There's some things you need to understand. We're going to dip into that. Just making faces at me. He's like, but we're here. And just for you, Jason Caps, it's Tuesday, man. What do you mean? What day is it? Okay, it's not really. It's Wednesday. We're doing a special thing. Look, it's fun. We had time. We're gonna do this thing. We're gonna do it, and we'll be right back after this.
Now, here's a question that all owner-operators and small fleet owners should consider. What happens when you access the unrivaled advantages that are available through the ES Advantage program? We asked Jeff and Charlie from Contractors Corner to share their thoughts on how they've been able to utilize the discounts and services that are a part of the ES Advantage.
So we started looking for a way to save money on fuel. And we were turned on to the ES Advantage program for fuel first. So we got a hold of Jeff Reese, and he ran us through that program. And man, we were starting to save. And then we started talking to them. Well, we saw their website and we said, Jeff, what's this thing about insurance and accounting and
right.
You lease trucks? What?
Right. And that's the thing is we only knew it as a fuel card. And when we started digging deeper, I mean, we ended up getting hooked up with an insurance provider, Seabright Agency, and they created an entire insurance program just for us and our people. And from that, we've learned that, now there's even more potential. There's a greater opportunity. And it's completely opened up our eyes and broadened our vision into what it is we're trying to do, which is help people do better. Wrapped with the ES community just makes that process so much easier.
Now, if you're an owner-operator or small fleet owner and you would like to learn more about how you can drive savings to the bottom line of your business, the ES Advantage program has the discounts and services that deliver the kind of unrivaled advantages that are designed to help you improve your overall operation. Get connected with the ES Advantage today.
Paying too much for trucking insurance? What if you could save more by making one simple phone call and keep more profit? You could very well do just that with one simple call to Seabright Agency, 800-366-6466. Call now.
And here we go.
Let me put my ears back on.
Once upon a time, not long ago, where people wore pajamas and lived life slow.
What?
Stop it. I like it. Whatever, Jeff. I just saw your message.
Yeah, I'm just saying.
Whatever, man. Look, I use a different ad, though. Did you notice?
I wasn't paying attention. I was doing other stuff.
You're a bad man. I ran a different ES ad from what we normally run. I'm just saying. It was fun.
It didn't blast my ears as bad, so there's that.
Here we go. Whatever. But hey, so we got to switch sides. It's throwing me off. I'm looking over at the wrong side.
You left me on the right side for half the show yesterday, and people started complaining.
That's fair. That's fair. It's definitely a thing. Live on 18 Wheels, what's up? Just because it's a thing. Chris Hamilton was first, Lisa was second, and Craig was third. 3
He's
hours.
under the weather. I tell you what, with this weather, I'm not feeling too great myself, man. I've been dragging all day. If you guys saw the video I put up on Facebook today, this is the second day my load was delayed for another 24 hours because of the snow and ice. But I can tell you something. I was actually on my way to the shipper when I got the call from Panthers saying, hey, so about 15 miles from the Baytown TA to my shipper, and in that amount of time, I saw quite a few accidents. and possibly a totaled truck, Charlie, that
Yeah.
may or may not had payments on it. I don't know, because I don't know what kind of deal that guy has. It looked like a newer truck, so probably payments. So what do you think? Did they have gap?
Let's hope for their sake they did. And that's exactly what we're going to be talking about. So, look, that was a great segue, Jeff. I like the way you did that. So questions that are not insurance, I'm gonna star them, and if we get time later, I will go over them. Okay, can't make a promise because I don't know how long we're here. We'll see what happens. Okay, just bear with us. But we real specific. We wanted to talk about insurance because some people got calls today, right? With Seabright Insurance, and and this is going to be real Swift specific, guys. So I apologize for that right now.
But
Right.
yeah, so specific in this instance. But if you have a gap, and those of us that have borrowed money on cars, it's the same thing. Gap insurance covers the gap between what you owe and what the car is worth, so that you're
Right.
not left holding the bag if you have a total loss. Okay,
Right.
so we're going to be talking a little bit about why things are what they are, and it has a lot at Swift, or if you're leasing your trucks, especially why they are the way they are to cover that gap.
And why the program that we have was built the way that it was built. Basically, I don't even know how to say the short of it, right? But here's what we got.
Let's start at the beginning. So,
Right.
With traditional insurance, and there's people that did this with Mojave too. You call in once a year and you get your your payment reduced, your premium reduced based on the new value of the truck at that time. Okay. That's a pretty standard thing with standard insurance. But that insurance, and this is where it gets a little muddled, and since we were confused, we thought y'all might be confused getting a call from Sandy today to backtrack on some stuff. That's traditional trucking insurance with no gap.
Right.
Okay. This is one of the difference between having a program where you're part of a group and traditional insurance. So at Swift, the carrier, IEL demands gap insurance, and rightfully so. So we had to build an insurance program that covered the gap. So that's why that covering of the gap is why we can't lower our rates every year like you might be used to. So what it is they've taken what the average premium would be over 3 years. Typically, you have a truck for about 3 or 4 years, and say, okay, this is the rate, 4% or whatever it is right now. We didn't have an increase this year, so we should be right there in the low 4% for truck value.
Right.
So they took the average of what that was over the 3 years. So basically, that lowering of premium is already built into the rate for the entire 3 years. Okay. So you're basically front loading the money that you would have to pay at the end of the lease, at the beginning of the lease, to smooth out your payments over that lease period.
Right. Which overall still stays less.
Right. We ran numbers with Tony because we actually called Tony and called him out on this. Hey, man, this isn't what we're used to. You need to explain it.
Right.
Now it took 2 hours, but he did try to condense this into a shorter segment. But that's the bottom line. So no, we cannot call in and have our rates reduced until we pay the truck off. But when you pay the truck off, you don't need gap anymore. It just you figure out what the value of your truck is and you get insured for that amount.
Right. So keep in mind that in the event of a total loss, right, the insurance pays for the Swift guys, will pay the entire owed value on the truck. Okay.
Yes.
So insurance typically pays to market value. we'll use my truck as an example because I know the numbers on it right now because I really went over them deep today. The only number I'm not positive on is my SLV right now, but we can say it's either 132,000 or 137,000. It's one of those two numbers. So we're going to work with that. So today my truck is, let's call it $137,000. If you look at like kind trucks on truck paper, which is basically how every insurance company they use that to figure out the market value of a truck, because truck paper has like the biggest repository of info on that. And that's basically where they calculate the market value. They take the average price for a like kind truck, same specs, mileage, the whole 9 yards. So my truck on truck paper right now with 350,000 miles on it is about $91,000 in the market. Now, keeping in mind that I'm actually in a team truck, and if I were running real team miles, I'm not. But if I was in a team truck, my truck would have about 500,000 miles on it right now for the length of time that I've had it. And then my value would only be $61,000. Maybe it was 67. I can't remember. It was pretty close to that. So from 91 to 137 is a $46,000 gap in what the market value, what the main insurance pays versus what the rest covers. Right. And this is the magic pieces. So gap coverage has a cap of $20,000. And I mean, it's something that's built in the insurance world, whatever. Way too much for me, but whatever. So in the event of a catastrophic total, right? If I'm only getting paid market value, like what OIDA would pay on the insurance, they're only going to give me $91,000 for my truck. I still owe $46,000.
And you're left holding the bag.
Absolutely. And in the event that I had 500,000 miles on my truck, like I should have, that's another $30,000. So now I'm at $76,000 upside down that I still owe on that truck contractually. So where am I going to do that? How am I going to pay that? Right? I'm not. It's going to go to litigation and it's going to be crazy and whatever. No, and you're absolutely right. I leased my truck at absolutely the worst time in the market. But
yeah, give you an idea. I leased a new truck a year later and got a much better deal.
Yeah, right. But the fact remains that there's still that gap. I mean, we actually had a claim this past year, towards the end of the year, where the guy literally left the yard, had just signed for the truck, was on his way to pick up or had just picked up his first load, had 80 miles that he put on the truck, totaled the truck. And our insurance paid it. It sucked, but they paid it.
Now, here's the thing: is that right now with the market the way it is, trucks are dropping like cars are when you drive them off the lot. So his truck paper price, what was it, Charlie? Like 170,
right?
And the lease was for 220 or something like that. So it's something to consider.
It was crazy.
So,
yeah,
so
the 60 grand right off the top.
Right. So these are things you have to consider when you own your own business. What if? Now, I've never had a total loss. 20 years, never had a total truck. But that doesn't mean that tomorrow I'm not going to be driving next to some jackwagon that hits a patch of ice next to me going 70 miles an hour while I'm doing 40 because of the ice and pushes me off a bridge somewhere.
And that's part of the thing is you can be the absolute safest driver out there with the cleanest record. It's not you. It's them. Right? And what we've been seeing is them aren't insured enough to cover the loss of your truck. They only have $10,000, $20,000 worth of insurance.
Well, there is a case right now, and we're not going to get into specifics on a legal case, but there's a case right now where a guy did not have gap, totaled his truck, and Swift is fighting over, or IEL rather. Let's be clear, it's IEL, owned by Swift, but still IEL is arguing over who's holding the bag
Right.
because there's no gap insurance. Now, we absolutely have our opinion on that,
Significant
but
amount.
again, we're not going to comment on current litigations and stuff like that, other than
Right.
what I just said. But you got to protect yourself. This is why, when we first started, Charlie, this is why OIDA was the same price or a little bit lower than what we were at, because they didn't have gap.
Yeah, they were
That's the
they were
reason.
lower.
Well,
Not-
until
were low.
everybody jacked their rates the next year.
Right.
But yeah, it's so insurance. What we're finding, guys, is so we've only been doing insurance for 2 years, Charlie, and we are not licensed insurance people.
Right.
So
Not by any means.
as we learn more, we try to get the information out there. I'm to the point now to where I actually told Tony this. When we first started this, we wanted nothing to do with anything insurance guys, and 3-card Monty guys were the same in my mind.
Right.
But now that we've learned more about insurance, how it works, why it's there. I mean, let's be real, Charlie. In America, especially today, everybody wants to win the lawsuit lottery.
Exactly.
You see the videos, right, of guys that completely just. I saw a video one time of a dude got rear-ended, got out, changed his flat tire that was caused by the accident, and drove away.
Right.
And that was a commercial for a lawyer, and it was dash cam video that the lawyer was using. It's like, this guy sued that truck driver and said he was injured. Now they've got video of the guy getting out of his pickup and changing a flat tire
Right.
on his own and driving away, and he's suing the trucking company because he got whiplash or whatever. Okay, well, he could have. If I'm a lawyer, and defending the trucking company, I'm gonna say, well, he could have done that. He could have wrenched his neck while he was changing that flat tire.
Right.
I mean, but that's how litigious things are. And that's why we have to protect ourselves, guys. The more you learn about insurance, the more you understand it, the more you can select the coverages that you actually need. And if you owe money on a truck, I can tell you right now, like, the bottom is dropping out of the used truck market again, like we haven't seen in years.
Right.
There was a while there, Charlie, where I thought about selling my 16
Right.
because I was going to make a profit on it.
Yeah.
Not anymore.
If I had sold Chewy the week I got this truck, I could have sold Chewy for 40 grand. Right
Mhm.
now, I might be lucky to get 2,500. That's real. Like I could scrap it for more than I could sell it in the market right now.
My tires on my 16 are worth
Right.
more than what I could sell the truck for.
Yes. That's crazy. But so the way the program was designed, and we talked about that right at the start of this, what was to stretch out that price and hold it there for us. I mean, we still have the chance of the rate going up or down based on our loss rates and that sort of thing. There's still some fluctuation, but it was built to try and draw it out to be able to hold it in the best possible way, which is why, once again, we didn't go up this year. So, 2 years in a row, we renewed flat.
And, full disclosure, we did have a couple of total losses. So it was kind of up in the air.
3
But
catastrophic.
because Tony, when he built this thing, smoothed out the rate, he was able to argue that, hey, we're already paying for that. Let's not do a rate increase.
Right.
And they said, okay.
Right.
So I think it's a good thing, in a program like this, we have a guy. We're not dealing with Flo at Progressive. We have a guy that's actually looking out for us to keep our rates steady. And he built the program so that he has leverage to do that.
And by the way, when I was saying that Sandy had to make some calls today, she had spoken to some people in the last couple of weeks and said that, hey, let's adjust your truck value so that your rate will go down because it'll be based on, a lower truck value. But they still need to insure for the whole value because of the way that the program is built. So it was just not communicated well.
Well, Sandy's not an insurance person like Tony is.
Builder, right?
Builder.
She's a sales agent.
She looked at it the way a traditional policy
right
is structured, and this is not a traditional policy.
And it's nothing against her.
No.
So I don't ever want anyone to think I'm trashing Sandy.
So it's
awesome. She was trying to do the right thing.
So if you're one of the guys that she has to call, be nice.
Right.
We've explained it, I think. But yeah, so the more we get into this, Charlie, the more I'm convinced that, programs like this are the way to go.
Right.
And we have one. I don't know of any other program like it because it was specially built for us.
I'm gonna dip my hoodie off.
Oh, it's finally warming up.
Rosie put a heater in here. Oh, look, I'm half naked. Yeah.
No.
Thank God the camera stopped right at the Stop it. I'm beautiful. My mama told me so. Hey, my mama's not a liar. Don't call her a liar. We'll fight, bro. I don't know what to do with my hoodie. I don't have anywhere to put it. All right. I'm better.
But Charlie, we're at a certain age, which means our parents are at a certain age, so they might see things a little differently now.
You shut up. Anyhow, but Army Kane, I got a guy, right? I'm saying we definitely got a guy. But yeah, so there's going to be a couple of very unhappy people we're expecting, and that's why we're trying to get out here kind of ahead of it. Some of those people probably aren't even watching the show, which is fine, whatever. We can point them here to get a better understanding. And of course, we're going to be talking to people and we'll have to be answering questions. But we thought that this might be a good way to get it out there and try and give an explanation. Because again, when you buy an individual insurance policy, right, they're rating you all by yourself.
Mm-hmm.
You have no buying power. You be quiet, Lisa, or you're about to get banned. And you know what? Watch. I can do a thing to her. Scrolled me. God, she scrolled me there. Tell me my mom lied to me. Anyhow, they are rating you, the individual, all by yourself, and you have no buying power. You have no leverage.
Mm-hmm.
Only your history. That's it. So if you got bad history, you're screwed. If you got great history, still you're kind of in a bind because they can't cover the larger group. Let's be real. Most people don't have accidents. It's several people that have accidents.
Mm-hmm.
And if you can spread that cost out over a wider body program, whatever, right? Then it helps keep the overall upfront cost down. In a program that they're able to do that, they're able to spread the loss and the expense over that vast group.
Right.
To everyone involved in the program. I guess that's the better way to say it.
Now, what if a guy's not part of Swift? What can we do for them, Charlie?
So that's it. We still have a program for that. And it's based differently depending on how your contract is written. If you're financing or leasing equipment and we need to cover, the full loan or lease amount, it's going to fall into kind of the same type of deal. If you own the truck outright, whatever, it's literally whatever the market value is or whatever you stipulate the value is, they'll insure it. You say your truck's worth $50,000, they're going to charge you a premium for $50,000. Just make sure your truck's not only worth $20,000 because you're going to pay too much for your insurance. But
if you own your truck outright, you got to keep an eye on it.
Yeah, you definitely want to be going in every year if you own the truck and adjusting that value. Like with Chewy, I didn't adjust it down because the
Mhm.
market was up and down. Right?
Yeah, like my 16, I valued it at 45. That's what Truck Paper said it was when I made the
Right.
switch, and my premium was 115 bucks a month.
Right.
Um, and you know, since I own the truck, I rolled the dice because at one point the truck was worth a lot more, and I just said, you know what, if it gets totaled out or whatever, I'll take my $45,000 and I'll put it down on another truck. I'm fine. You know, but you got to keep an eye on it because now the truck's worth about 5.
Right.
So I would not want to insure it at 45.
Oh, and full disclosure, if any of the angry folks who are there's a couple out there who have absolutely stated, I don't want to insure it for that full value. I shouldn't have to. I'm not going to get in a wreck. Well, okay, there's actually we have a policy that you can get.
But you're going to have to sign.
Insurance.
But you're going to have to sign a piece of paper that you understand that.
Right. That it's going to say that if you total your truck today, we're only going to pay you $55,000 because that's what the value of the truck is today. But you owe $100,000, so you're going to have a $47,000 shortcoming that you will be legally liable for.
Yep.
Period.
And you know, again, so we're talking mostly Swift because that's, you know, most of you guys are Swift guys, but we do have programs for outside of Swift as well. And it really depends on what your contract, your equipment contract
Right.
is. You know, if you're one of those fancy guys with a high credit score and you went out to a bank and got money, that's going to be different than if you're getting it from a leasing company. If you're leasing a truck, I don't know, Landstar doesn't lease trucks, but they have a leasing agent that they use. You got to make sure that you know what they expect to be paid if you total that truck. And Seabright will arrange to make sure that you're covered. Because here's how this works. A lot of people don't really know this. So, Charlie, it took over 3 months to build this program from the time we started. And the reason was literally because we would send paperwork over to Swift, and Swift would say, no, we need this, this, and this. And it would go back to Seabright. Seabright would say, okay, well, let's find an underwriter that will do this, this, and this. Okay. Life on 18 wheels, yes, you do. Just saying.
I know they did.
You go to the Landstar website, and there's a company they prefer that you use if you're going to lease a truck. They also have financing available if you're one of those fancy guys. But anyway, and it just went back and forth like this until we finally came to, in the middle, something that Swift would accept on the coverages. So that if you're with a carrier that Seabright hasn't done this for yet, it might be that type of thing. And if that's you, by the way, let us know because we might have an opportunity for you if you're the first one at a carrier. Just saying.
Right. Ha, I put Lisa in timeout. That was funny.
Did you? Why'd you do that? Lisa's nice.
Lisa's
To me.
To me. She said my mama lied.
She's nice to me.
She said my mama lied, bro. Can't call my mama a liar and think I ain't gonna do something.
It's a matter of perspective. I mean, I would say you have a face that your mother probably loves.
And Jeff has been put in timeout as well. All right, he's back. Whatever. Oh, now we're on the wrong.
So yeah, it does get complicated, and we're 2 years into this, and we're still learning new stuff every time we talk to those people. Sometimes, Charlie, we think we understand something, and it turns out we don't.
Right.
That's always fun.
That's the greatest moments.
But yeah.
Yeah.
So do you guys have questions on the insurance? Again, this was kind of a down and dirty. We wanted to get stuff up. Yeah, Lone Mountain, I know about them. Yeah, they don't want to be involved in lease at all. But every time I've talked to them about going over there, they've recommended a leasing company. I can't remember what the name of it was.
Yeah, it's not on the website anymore, Jeff.
Oh, so maybe they divested themselves of that entire thing.
Right.
And the last time was probably 2 years ago when I looked at them, and you had to be running with them for at least 2 years before you qualified for buying, like using their finance arm to
Right.
buy a truck. I thought it was an interesting program, but at least unlike other carriers I know about, they had a way for you to buy your truck out at the end of whatever lease you had. They had a finance arm that they worked with. You know,
There's some.
Landstar's really good about the whole you're in business for yourself.
Oh yeah.
Absolutely.
Oh, but yeah. So if you guys got any questions about this, I had questions, and that's what led to this, and things got changed. I mean, look, I thought I was going to get a rate decrease, right? And I was like, all right. And Sandy's like, no, sorry. I was like, dang, right? We just didn't have all our ducks in a row. It was fine. I mean, it sucks. And look, if you're adamant about getting your insurance reworked, if you're at a Swift and you want to get it reworked, you're opening yourself up. It's possible to do. I mean, you could switch the insurance carrier through Seabright, or you could go to another carrier, whatever you want to do. I mean, I think you're crazy leaving Seabright at all, but I mean, that's a decision you're going to have to make. Let's take an example. Let's say that, and this is a real world example. Someone with a $100,000 truck saw the market value of their truck's only 53 and wanted a new policy based on that value, but they still owe 100,000. That's where that letter comes in. And what are they saving? $160 a month. And if they have a total loss, that $50,000 that they're short, what's the loan on that going to cost you to save the 160 now?
Right.
Probably way more than 160.
Insurance it's roulette, man. The underwriters, I love saying this, Charlie, so I'm going to bring it up. One of our policies is actually from Lloyd's of London, which I just think is cool for some reason.
I know. Fancy.
But so they're betting that they'll never have to pay out. And you're betting that you're going to have an accident, have something happen, and you're going to need that money.
Right.
Most of the time, the insurance company absolutely wins. But, look at Southern California right now.
Right.
I think there's insurance companies that are going to go bankrupt over that.
Right.
You're talking multi-million-dollar homes down there. And I can't, the insurance on that is probably more money. The premiums on those houses are probably more money than I'll ever see.
Right.
But even with that, that total loss down there, that's going to cost some businesses, I think.
Yeah, it's absolutely crazy. It breaks your brain. It just breaks your brain. And the amount of zeros involved out there is just unnerving to me.
Well, like a lot of things, Charlie, I'm going to do a bad thing and bring up your favorite topic, the Second Amendment.
Yeah.
I wish we lived in a world where we didn't need these things.
Right.
But we don't. So what do you do? Right? I mean, it is what it is.
Exercise your rights or lose them. It's like muscle.
We're not talking about muscle, man. Come on. Especially not in front of Matt. Come on.
Whatever. Tiny dancer. I ain't scared.
I think Matt could just break us.
He's probably doing that right now on the screen like this.
Squishing your head down.
I'm squishing your head. I'm squishing your head. Oh, my bad.
He is now. I guarantee it.
Right. Yeah. So any of you guys that have questions about the insurance stuff, we're gonna hang out for a little bit and just kind of BS for another little while, just in case anyone has any questions. And because it's a weird thing, The meat and potatoes of this thing, I think, are covered in this first 20 or 30 minutes. Just wanted to explain what's going on, why we can't change things and that sort of thing. But anything else you guys want to touch on, by all means, throw it up there and we'll talk about it, man. I like it. Gorilla strength, he said. Oh, we
So I'm gonna answer Jay from Tech real quick.
Yeah.
First of all, we go over numbers at Swift all the time with Charlie's truck. Maybe it's time to do that again. I don't know.
Right.
Maybe we can do something with that. I'm not at Swift anymore, so my numbers are way different.
Right.
But I wanted to get into this a little bit since we're here. If grossing $23.50 weekly as a company driver would Swift owner operator be worth it? And I'm going to say, because this is always our answer, it depends. It depends on why you want to be in business for yourself.
Right.
What's your motivation? What's your why? Money, I'm telling you guys, we've been hobnobbing with some pretty well-off people over the years.
Right.
And to these people, and they're all business owners. Some of them are business consultants, coaches, insurance people, other owner operators, small fleet owners, independent owner operators that we need to start calling them what they are. They're carriers,
Right.
Small carriers, people that have their own numbers. It's not that they don't pay attention to the money, but it's absolutely a secondary concern. The money that we make as business owners is directly proportional to how good we are at what we do. That's the motivator for successful business people, is to just be the best at what they do.
Right.
Always learning, always moving forward. Can you make more money as a company driver? If money is your primary concern, the answer is yes, especially the first year that you're an owner operator, because you have a lot to learn, man. You have a lot to learn. Running your own truck versus driving a company truck, totally different game. And, Charlie, you and I have talked about our whys over the years, and I just really love the game. So there's been times when I could absolutely make a whole lot more money as a company driver. But that's not what excites me. What excites me is when I do fall behind a little bit and things aren't going great, finding that solution that gets me back on top. I'll talk to people that are doing better than me and try and figure out, what's that guy doing that I'm not doing?
Right.
If you get into the Swift groups and you ask that same question, here's what you're going to get. Oh, don't do it. It's a ripoff. Those guys don't make any money. This just negative.
Truck.
Or my favorite, I did it for about 2 years and it sucked.
Right.
I would absolutely, the only thing I want to know from that guy, what mistakes did you make?
Right.
And you know what? He'll never tell you because it's all Swift's fault.
Right. He didn't make any mistakes.
Right.
He did everything perfect.
You run into someone that's failed in the business. I want to know, why did you fail? What happened? What lessons can I learn from your failure? When I find someone that's more successful than me, I absolutely want to know what they're doing different. Even with the freight being as soft as it has been, we have dudes that are still doing 3,000 miles a week and they're not on dedicated.
Right.
How is that? You need to ask those guys, how is that you're doing so well and these other guys are losing their trucks? And I know the answer. They did the hard work of building relationships at the company that's responsible for getting them freight.
And managing costs.
See, that's the other thing is, you'll hear some of these guys, oh, I make $200,000 a year. No, you don't. Your truck makes $200,000 a year, but after that, you got to pay for fuel. You got to pay for your insurance. You've got to pay for this. You got to pay for that. Bottom line is what we focus on. How do we cut costs? Fuel and insurance is the main things. to raise our bottom line.
Right.
That's the game.
So Jay from Tech, when you asked this question, I actually took exception with the way that you asked this question. If I'm grossing $23.50 weekly, I don't care what gross is. What I care about is what net is.
Right.
Right. I know you're an employee. I get that. But gross is garbage. Gross is not what you're putting in your pocket. That's what's important. If you're paying into, as an employee, you're paying into a 401k or health benefits or all those things. I mean, those are absolutely things that you would need to think about as a contractor as well. Right. But what is your real bottom line? How much money is going into your bank?
Mm-hmm.
That's the number you should be working with, not the gross, for starters. And then making decisions, if you're going to make decisions on the money, it's part of it. Let's be real. But it can't be the whole decision. It can't even be the major decision if you ask, either of us.
Mm-hmm.
I mean, of course, it's a part of the equation, but you got to start with the right part of the number. What is the net?
And, if you want to answer your own question, PM Charlie, because, on Facebook, we actually use our real names. Don't PM me because I'm not at Swift anymore.
Right.
And I don't have the current ICOA. Get the mileage pay from Charlie.
Yeah.
And start tracking what you would make as an owner operator. Charlie could tell you what the trucks costs per week. And I would use
high end.
And we could tell you what the insurance and everything would cost you. We have the ability to do that. We can actually tell you both if you went with Swift's insurance and if you went with Seabright. That way you can compare. And then keep track of your fuel ups and how much money you're spending on fuel. And we've fallen away from doing the surcharge on the weekly show.
Right.
But we can get that to you as well to add to your
cents per loaded mile dispatch right now.
Yeah. And start keeping track of your numbers on your truck right now and see how it looks to you. Keep in mind that most of us are not using data for fuel.
Right.
And if we are, we're shopping. I mean, let's be real, Charlie, it's mainly QTs that are beating everybody on data.
Circle K was cheaper today over on I-65 in Alabama. Yeah, the dang QTs that I was averaging $3.39 on went up to $3.49. Circle K was 20 cents less just down the road, right there in Montgomery.
Right. But you're going to want to learn how to shop for your own fuel. We have our fuel card that we like. The average, so it's all over the board, but the average for right now is 55 cents a gallon off at the pump. I'm seeing closer to 80 cents in the lane that I'm in.
Hey, Wade. Hey, Mark.
And some guys are seeing less than that. But that's the average that ES has published recently is 55 cents a gallon. What I would say is just keep track of the fuel as Swift is having you fuel. And understand that you're not going to be spending that much on fuel if you do everything that we tell you to.
Right.
And if that looks okay to you, then it's going to look better to you when you lease a truck and you start fueling properly.
I actually went over some numbers on fuel with one of our viewers this week or this past week, right at the end of the week, over the weekend. No, Monday. I don't know what day. It was recent, last couple of days. How's that? Sometime in the last 5 days, I went over my fuel expenses for last week. I used two different mile per gallon averages. I used 7.5 and 8.5. Those are pretty common, easy numbers in either way to get. And it was based off of, the current fuel surcharge that I have at my carrier. Out of pocket after fuel surcharge was paid, it only cost me $26 for fuel for, 2,500, 2,400 miles, something like that. I can't remember what the number was. So after fuel surcharge at 8.5, I only paid $26 for fuel.
Mm-hmm.
At 7.5, it was a little bit higher than that. But the person I was talking to, if they were on that fuel surcharge, on their fuel surcharge, they would have paid $400 more for the week of fuel, running the same miles, everything else being different or equal, excuse me. And so it's important to understand that, the national average is one thing. I typically don't pay anywhere near the national average. The national average this week, for this past week, was 3.71 cents per gallon. My last week of work was at 3.39, so 20 whatever cents off the top of my head under that. Then keeping my fuel mileage up, I was probably around 8-ish, 8.5-ish. I honestly don't know because I didn't dip into it this week because it's been crazy. But so calculating that out, I'm probably in the neighborhood of probably $100 in fuel costs, maybe. So yeah, wait, I will. I definitely got some questions, man, and I want to talk more to you. Sorry, I was getting in the chat. Hi, Ida. Yeah, we're doing a special insurance thing that we wanted to talk about, and can't go back over all of it now. But the first 30 minutes of the show are all insurance, all the time. Just saying, it's some pretty important stuff for guys that are on Seabright Insurance and those who are looking to purchase trucking insurance anywhere else, not just at a Swift or somewhere else. I mean, the stuff we were talking about was pretty Swift specific for our guys. But yeah, so I mean, it's a thing. I got one in. But yeah, but if there's anything else you guys want to talk about, by all means, TK, I see you. I'm gonna actually talk to you here in just one sec. I want to make sure that we got Jay from Tech covered. Jay from Tech. Look, there's an email address right there scrolling across the screen right now. Shoot me an email and I can get some correspondence going back and forth between us. I used to put settlements up on the glass, as we say in the realm. Using my numbers pisses people off because I'm a team, but I don't run team miles. And, then I had a paid off truck and it was like, it didn't matter what I put up. So what I can do is I can get some averages from you on what you're doing. I can give you an idea on what you could expect over here. And maybe a couple of other carriers based on some information that we have. And maybe we can work something out and get you a little more information that way. Going over it specifically for you for this right here, probably not the best venue, but absolutely reach out, man. You can go right there. Send me an email at charleymahon, charleymahon.cc@gmail.com. charleymahon.cc@gmail.com. There you go. Oh, my computer froze for a second there. That was awesome. I wonder if the sound froze.
No.
Okay, good. That was weird.
We're gonna glitch again.
Dude, it's got me freaked out, man. It was just a little pause.
Like doing the max headroom.
I was stuck. It had me with my face stuck down like this. I was like, but I'm looking at it. Why isn't it moving?
And for those of you that know who Max Headroom was,
right,
we can be friends.
Yes. TK, your question. Okay, so will the overall price of trucks be going to drop? That's as well. I don't think so. Not on the new truck market. The used truck market is absolutely plummeted. And like a carrier like Swift, I can tell you that they do adjust for current market conditions, which is why I got hammered when the trucks were high, and people came in right after me and got the same damn truck for much less. So that's a thing. But yeah, so looking, and we talked about it on the show yesterday, some of the EPA stuff may be getting pushed back. The California regulation stuff might be is dead right now. But based on that, I think they've already been adjusting prices up for a while and trying to get them to level out on the new truck market. So, I mean, on a new truck, I don't think we're going to see a huge drop because of every year there's just all this new technology that they got to pay for. And Wade said, yes, we are old, Jeff.
Yeah, okay, I'm good with that. I don't care.
Right?
People say I look like Walter anyway, so screw it.
Nice. Oh man. But yeah, so I think that's where we're at, TK. If you're looking at new trucks, look, right now is a great time if you've got cash. I I would try not to finance a used truck. The prices are pretty low, and if you can go out and pay cash on a $50,000 truck, I think you're in a good position. And you're
Yeah,
already
we know of a place to get trucks with 350,000 miles on them, still have, warranty time on them and everything for 65,000 right now. So, there's what, 300 trucks did the guy say?
right.
And they're actually going through them and like putting new seats in and all that stuff because that's just it's taking to get rid of trucks right now. We're really hitting that point that we've been talking about for a couple of years, folks, that during COVID, all these people that had no business being in business went and bought trucks. And the banks are finally starting to take them back. They were a little slower on it than they have been in the past because
Right.
people were so upside down.
Right.
But the banks have had enough, so they're starting to take the trucks back, and that's causing downward pressure in the used truck market. So
Yeah.
if you have some cash, now is the time to buy some trucks.
Absolutely.
We think. Now, the last time this happened, Charlie, we didn't have cash then either.
Right.
But we actually thought about, dude, how much money you got? I don't know, man. How much you got? Just buy some trucks and park them until the
Right.
freaking market went back up, because we were looking at decent trucks with under 400,000 miles on them going for $45,000-$50,000, and we knew darn well that in a regular market they were worth 70.
Mm-hmm.
I mean,
Right.
if you got cash to play with, I don't know. We're not financial advisors. You should talk to your accountant before you do anything, all that stuff. But we're
How's
just
this for
looking
a
at
thought?
things.
How's this for a thought, Jeff? Let's say you bought a truck today at that $50,000 range, right?
Mhm.
And you ran that truck for a year, and the market a year from now will probably start moving the other way,
Yeah.
right? So that truck that you bought for 50,000 and just made income on a year on,
Mhm.
you could, in theory, sell that for 70 a year later.
Here's the thing, too, Charlie. Remember, we ran numbers on my truck when I bought it
Right.
out. So the lease payment on that truck was $32,000 a year. So so in a year of operation on a truck that you paid 50,000 for, you've already recouped over half of what you paid on that truck
Right.
because you don't have any payments.
Right.
And then you're going to sell it for 70.
Right.
Now you're going to and you're going to depreciate 1/3 of that truck the first year anyway. When you put it all together, Charlie, that's a money-making opportunity.
Right.
Assuming you do your maintenance. Come on, guys, do your maintenance.
Right. And then that's the important part. The older the truck, you really need to stay on top of maintenance. Wade, as far as older trucks, I'm gonna go back to Matt's thing here. Let me start so I don't forget it. Just try to know how old of a truck Swift will lease to you. Like if you don't want a 24, for example. I believe they've got trucks as old as 21 or 22 right now. Maybe it's 22, 23. I'm not positive, but you could definitely get a hold of Michelle Cantrell. I can send you her number, Wade.
Find out what the inventory is.
It would be better to get an answer from her directly.
Yeah.
I'm not a fan of the MRP program.
Nope.
Just gonna say that I don't particularly care for it. I think it's a wash in the end on the cost. Yeah, Wade, I'll do that, man. I'll send my next email to you. We'll have her contact info, bro, and you'll be able to ask her directly that way. And by all means, tell her I told you to call, because you will hear the eye roll through the phone that as soon as you mention my name, that she's going.
Oh, I'm going to be her. Oh God.
God, I gotta tell her. I gotta highlight that. Yeah, you'll hear the eye roll that she produces when as soon as you mention my name. It's hilarious. I just talked to her a few minutes ago before the show.
She has that southern accent.
Yeah.
And the first time I met her, when Charlie introduced me to her, and she found out I had the beaties, her accent just stuck in my mind. Charlie, oh, are you on the keto?
Oh, wait, just for fun. Yeah, she is in Greer, and just for fun, mention my name and then say, "Hey, Chris Hamilton wants to know." And she'll probably cut you off right there. No, I don't have his backpack. It'll be
Yeah.
great. And if she
Yep.
doesn't cut you off, ask the question. Chris Hamilton wants to know if you've got his backpack yet. Bro, I'm telling you, she may hang up on you. You might have to call her back, but it'll be funny. It'll be worth it, bro. I'm just saying, it's great. We love to mess with people, and it's hilarious. Love that woman like a sister, for real. Matt, back to Matt Nissen. Matt said if anyone wants to use the spreadsheet that we showed yesterday on the show, and you can actually use that to see how you would perform at Swift. You may need some input from someone who's over here now, such as myself or Matt or whomever, to get some real world type numbers. And we can get you hooked up with that. Matt, if you could throw up your email address, man, and we'll put that on the screen for anybody who wants it. I don't think I have it. Yeah, I don't have it saved. So if you could do that, that would be awesome. And yeah, because you can post links. You got a wrench. So, but that way, Jay from Tech, you could actually use his spreadsheet. We could give you some numbers to plug into it to give you an idea on what you would be looking at. There you go. There's the email address, Jay from Tech, MLNissen, MLNISSEN at AOL.com. MLNISSEN at AOL.com. Huh? Oh, my
Community at work.
Glitch in my video. That was weird. It's really starting to scare me.
Dun, dun, dun.
It's all because we do a special thing. But yeah, so if you guys got anything else, by all means throw it up. Otherwise, I think we'll probably wrap this thing, Jeff. What do you think?
Yep. I think we got across what we need to get across.
Yeah, we'll let it roll here for a couple more minutes. By all means, reach out whenever you guys need to. Like I said, if you got some stuff you want to go over, my email address was up on the screen there. If you're looking to join our private community, you can go right there to that web address that's scrolling across the screen at the bottom.
Yep. And about that, so I will have the calendar link for the big event coming up on the 1st so that you guys can register for that.
Right.
And I already got a good question from, I want to say it was Chris. I don't know if it was Chris or not. Even if you cannot make the live event for this special training that Josh is going to do for us, go ahead and register anyway, because you'll start getting emails directly from him on what's going on and any of the bonus stuff that he's going to throw in there. You'll get access to that if you're registered. If you're not registered, you're going to have to wait for us old people to figure out how to get the replay up on school.
Right.
And as you've seen, it takes me a minute. So, and this is going to be different anyway because it's his thing. So we're going to have to get the files from him and then put it up there for the replay. So,
right.
So your best bet to make it easier, even if you can't attend live, go ahead and register. I'm going to say with events like this is for the best year ever training, which is a high ticket training that these guru types do. It is best to attend the live webinar because there's going to be exercises and breakouts and things like that they do to help you along and really understand the material a little bit better. And, it's always better, Charlie, when you can ask questions live, right?
Right.
Instead of having to wonder if the guy's too busy to check his email, which happens to all of us, right? So
yeah, for sure.
I mean, we will be there in the school platform, obviously, as kind of his helpers. So if there's something you're not clear with on the training, that that'll be your best bet, is to get involved in school. And if you're not part of that yet, since we're wrapping it up anyway, Charlie, the school thing, that is our subscription that we have. It's $47 a month. And right now, if you sign up for that and then follow the link I'm going to put up there for the Calendly link to register, you'll get the $2,000 training from Josh as part of that subscription. Whew. I take a breath after that. Jeez Louise.
When is this?
Matt. February 1st, Matt.
Oh, man.
That's what, noon to 3 Eastern?
Yeah. It's the first Saturday in January, which is the first. February. I knew that.
And for those of you guys that were waiting for me to do my January training, it's because we've been working with Josh to get this thing done, because that was really his presentation is the next step in what we're doing there. So for you, if you guys go in there now, you can catch up with all the training. The replays are up. Do the exercise, get your journaling going, and get ready for the big training coming up on February 1st.
Let's see. I got to do a thing real quick before I forget, because I don't want to screw this up.
You already did. I'm sure of it.
It's probably not wrong. Wade, I just emailed you the number. It does not end in those 4. Not the one I have for, unless it changed recently. So I sent you a number. Check her out. Give her a call. Like I said, she can give you the most current, up-to-date type of info. All right. I think we're going to call this thing a wrap. Jay from Tech, reach out to Matt Nissen, get a hold of that spreadsheet. You might be able to get some numbers from him. If not, you can reach out to me on the email address that was scrolling across the screen earlier, and we can plug some numbers in there for you to give you a better idea. Other than that, Jeff, go ahead, drop your thing.
Remember, with no action, there is no traction, guys, and keep that rubber side down. It's dangerous out there.
Chris, I'm thinking Charlie spent most of his time in the principal's office.
You're assuming that he attended school and didn't play hockey all the time.
Oh my God. We'll see you guys. Hey, Lisa, by the way, that was just fun. I only timed you out for 10 seconds. You're good. You can't make me mad. Come on.
See, she's nice to me.
Whatever. She's sucking up. Anyhow. And you're welcome, Wade. Hey, you guys, we'll see you guys next Tuesday, 6 p.m. Eastern time. If you know Swift contractors out there, or anyone that's a contractor wants to know more about insurance, send them a shout out for this show. Tell them to come check out the first half of it at least. Swift contractors that are on Seabright, by all means, point them this way. Not everybody subscribes, are tens and tens of viewers, right? But we'll see you guys right here next week, 6 p.m. Tuesday, like normal. Welcome to our Wacky Wednesday show on insurance. Thanks for tuning in. You guys take care of each other. No one's out there looking after us but us. And we will see you Tuesday right here.